get started with some comments. As most of you know, I'm an American. I'm married to a Canadian wife, and when I got here, I was proud to wear my poppy. My father was a foot soldier in World War II, slogging his way through France, Belgium, and Germany. And when I was coming in town, I was on Burrard, and the light changed quickly, and the car in front of me had to stop quickly and had a bumper sticker. And the bumper sticker said, "If you're not willing to stand behind the troops, you're more than welcome to stand in front of them." And I think that's a point. My dad, just a short story here. As a kid, I always asked him about the war. He had this brand new P-38 with a leather holster, binoculars, German binoculars. And I always asked him about it, and he never said anything, would never talk about it. And my mom even scolded me once for even talking about it. So after that, I never bothered. But came home from a partying in college days with my friends. Came in at 2:30 in the morning, and I see my dad sitting at the television, black and white, real footage from World War II. It came out in the 70s, and he's just tears streaming down his face, dripping off his chin. "Dad, what's wrong?" And he just pointed. He could barely speak. He said, I was there. And we talked till the sun came up, and that was the only time he ever talked about the war. And anyway. So we're going to talk about a lot of things, a lot of changes that are going on. Our market's been tough this year, 2018. For the general mining stocks, it's just been a year that just didn't happen for us, and now we're seeing tax loss selling. There were some discoveries. I felt fortunate that I was a newsletter writer involved with some of these discoveries. It was fun. We're making money again. Obviously, what the market wants is big, new, high-grade discoveries in good jurisdictions. And the evidence that I'm seeing is that money is flowing into that sector because the mid-tier producers and the majors all need to replenish their reserves. They are desperate. And if they don't start doing that, we could see some merger and acquisition activity in 2019. So I felt like somebody last night I was talking to, I wish I could give credit to the person who told me this, but he said, doesn't it feel, Greg, like we're in Gulliver's Travels where Gulliver's being tied down and we can't get up, you know? We feel like we should be moving forward, but the market's holding us back. And I say, yeah, it's exactly that. But I think Gulliver is about to break loose, and we'll talk about that. So, discovery. Discovery is the theme of my newsletter. It's where we've made the most money over the years, and the last 5 years it's been a tough haul. Nobody cared about exploration, but that's changing as we've seen. Quote from a Hungarian-born biochemist: "Discovery consists of seeing what everybody has seen and thinking what nobody has thought." Okay? And this is just something that I really key in on. I believe 2019 is going to be the year things change. How much they change is really dependent on some of these factors that we'll talk about today, but it's certainly getting very concerning what I am seeing. And, for now, I think we focus on how do we make money. For me, I could stand up here as a newsletter writer when I do these talks. We only get 20 minutes, and it's hard to put together a logical, thorough examination on any topic. But I really thought Jay Taylor's talk this morning really set the stage for what I'm about to talk about, because he gave the history of how we got ourselves into this mess. And even Paul Volcker, the Fed chairman from the 70s, recently commented in an interview, the United States is in a mess. Things are an absolute mess. And I think we're about to see the consequences for literally decades of abuse are suddenly going to catch up to us. It's like the pink elephant's been in the room for decades and no one's paid attention to it, thinking, oh, there's no problem, we can keep going. But it's like an elevator, you're at the 50th floor and all of a sudden the cord gets cut. Everything's fine, 40, 30, 20, 10th floor, boom, right? It's going to happen so suddenly, it's going to shock people. So I think that 2019 could be a a really strange year for a lot of things. As a newsletter writer, I could stick with the status quo talk, talk about the status quo, stay conservative, stay within what's going on right now. I'm not that guy. I like to really look at things, and when I see big changes, I'm not afraid to take a chance and say, I think this is what's going to happen, and today's one of those moments. So on the good note, the treasure hunt is on. It's fun. I love exploration, and when I started my newsletter back in 2000, that's what I was focusing on. I loved it. We had a great run. Back then, I didn't know as much as I know now. I didn't have as much experience, and yet I had a lot of success. Not based on what I know, just because the market was so good. All you had to do is be involved with it. Now I know much more, and we haven't had the success, but I think that's going to change, like I say. So I believe discovery and exploration are going to lead the way for us. They're going to lead us out of the wilderness and into some serious profits again. Recently, I just revamped my newsletter a couple weeks ago to reflect this emphasis on discovery. During the lean years of the past 4, 5, 6 years, I had to move in a survival mode away from exploration because no one cared, towards the production and development stories, which did help us, and we did survive, and we did well in 2016 on some of those picks. But right now, the focus is on good jurisdictions and good companies that have the greatest odds for big, high-grade gold discoveries, silver discoveries, base metal discoveries, whatever we're looking for. The market will reward any company that can make a big, high-grade discovery in a good jurisdiction. So I think one of the things that I try to do is I try to handicap the odds for my subscribers. What I mean by that is there's lots of exploration companies out there. How do you know as an investor which one is better than another? Which one has a better chance? And this is what I really pride myself in, and because I look at these things, and I just made 2 new recommendations, 2 of which are sitting on the table with me today. You'll hear about their stories. And EMX, which everybody knows, I have in my retirement portfolio. So I think that speaks for itself. But the odds, I think the best information that I could give you is how you can discern the good companies, the best companies from the good companies from the average companies. That more than anything else will help you supercharge your portfolio for profits moving forward. And what I mean by that is that, like the 2 new recommendations I have today, these were years in the making. These things just didn't happen overnight. And what I think is, it's a scenario where we need certain things. I like situations in good jurisdictions where other people have spent a lot of money, in some cases tens of millions of dollars, trying to make the discovery. And then markets cycle up and down, and then we get the project on the cheap, and we get all this data, and then we get some good guys that know how to rethink this data, put the drill vectors in a different direction or a little deeper here, moving them over a little there, and they make a further discovery that goes on to be bought out. That's what happened with Great Bear. Okay? Everybody thought the Great Bear land was in the wrong area. It was the wrong rocks. The experts all said so, right? Oh, let's not bother with Great Bear. Well, I didn't believe that. I just said there's a lot of data here that tells us the gold is there. And it came through. And that is the thinking you have to have. You have to kind of go against the grain sometimes, but it's good when you see these situations where a lot of money's been spent. You can see the gold is there, the precious metals, whatever we're looking for, but we need that. It gives us greater odds, I think, of future success. It's not a matter if we're going to hit the metal we're looking for. It's just a matter of if we're going to hit a big enough economic section to make a mine or to get bought out. So one thing I wanted to talk about, my top jurisdictions. I've been getting this question a lot lately because a lot of new people have been coming back into the newsletter that followed me years ago, or new people that are coming on. My favorite jurisdictions are Canada, right? Well, Greg, that's a country. Well, yeah. Canada is my favorite jurisdiction because there's so many great places in Canada. I tell people all the time that Canadians have mining in their heritage, in their culture. Anybody who was born in Canada would probably have a relation with somebody in their family that worked in the mining business. I've traveled the earth. I've never found any other people that have more knowledge about mining than Canadians. They know how to do this better than anybody else in general terms. And so, where should we look? Look to Canada, because their country's been abundantly blessed, and they allow mining, and it's easy to operate. And certain jurisdictions go in and out of favor, sure. Right now, the focus in Canada is on Golden Triangle, rightfully so. Big new discoveries are being made up there. You can see it in the effects of the share prices, GT Gold, several others, of course. But, that's an excellent area. I like the Yukon. Obviously Red Lake is going to get another look-see now with the Great Bear discovery. I also like southern BC. South central BC is with the West Haven discovery, and you'll hear about New Carolyn Gold just 2 hours away from Vancouver this morning. But I like all these situations. And Nevada, Mexico, Peru, these are all areas that I think are where you are going to find the biggest chance for success with the right people looking in the right projects. And that's what I focus on. So how do we know which companies have the best odds of succeeding? I just explained that. I think tipping point for markets is likely going to happen. I think it's 2019. I don't know how much longer the situation can go on the way it is without having certain things happen. We're just seeing so many red flags. Global debts are soaring, interest rates are going higher, contrarian indicators for precious metals abound, the fund managers sense a change. I go to this Beaver Creek Precious Metals Summit every year in September, and it's an important conference for me because I want to know what these guys are thinking, because they're the biggest drivers of our mining shares. When they come in, they are the ones that make the market crazy, where, what we see as a good drill results, and in a bad market, it's a selling event. The stock, instead of selling off, goes up to, from 20 cents to $2, $3, right? That's because these funds come in and they're buying $5 million worth at a time. And they're all competing for these same companies, and that's what drives our market. So they sense a change. The attendance there is growing. And I think once the tipping point is reached, the US dollar will tank and the dollar long position will be liquidated, adding fuel to the fire. So the recent Saudi thing, which I'll mention later here, is a case in point. The Saudis last month are talking about changing out of dollars for oil into gold-backed Chinese petrodollars. Sounds smart to me. Why would you want to hold dollars when there's nothing behind it but political promises that mean nothing? The Chinese are backing their currency with gold. It's a petrodollar. Smaller countries have already opted for it. Russia's doing it. If the Saudis do it, it could be game over for the dollar, literally overnight. We'll see what happens. So contrarian indicators I continue to watch. The record speculative short positions in the precious metals, just these arrogant traders have come to believe this is a one-way trade. They'll soon find out otherwise, I think. The Vanguard rebalancing of the $2.3 billion gold and precious metal fund and the Global Capital Cycles Fund, trimming exposure to precious metals to 25 cents, or 25% of assets under management. These are all signs to me that things are going to change in our favor. Average retail investors couldn't care less about gold mining stocks still. I mean, we're definitely in the good side of things for a turn of events. And the only investment sector not booming, of course, is commodities and precious metals. So ongoing rumblings. The fallout from the Brexit situation, I mean, this situation just continues to drag on. Saudis considering switching out of dollars for oil into the gold-backed Chinese petrodollar, big deal. Toxic political division in the United States. If we're not safe in our homes because of our political opinion, I think we have major problems. In my view, this could lead to some kind of civil unrest or civil war even. It's that bad, I think. I don't see any solution to it. Trade wars, we'll see what Trump's doing, whether he's just using it as a negotiating tact or whether he's really serious about this, but these are all issues that seem to be causing a lot of problems. The emerging nations contagion over in Europe, Greece, Italy, all those places, it just seems to be spreading slowly. This is so eerily similar to 2008, it's mind-boggling. So gold is the retail investor's hedge against government instability, insanity, and less faith in our established institutions. I just think the day for gold is coming. I told somebody else just before I got up here that we have to hope that it's a slow, steady rise, not a spike. If it's a spike, then things have gone really south. While that's potentially possible, we all hope that that doesn't happen. So the match, the catalyst, what is it going to be that lights this terrible tinderbox of extraordinary proportion is getting closer and closer. But don't fear. I'm not a fear guy. Don't fear or worry about what you can't control. But look at this as an opportunity to make big money. Whenever there's these kind of crises, there's big chances to make money, and that's going to be with the precious metal mining shares, I think, and physical ownership as well. Concentrate on what you can control. You can own gold, silver, you can own the quality mining shares, you can take a preparedness mindset, right? After that, all investors can do is get out of the way and let the governments and central banks of the world commit economic suicide, because that's what they're doing. The debt snowballs just crazy. It gets crazier every month, every week, every year. 150 trillion has been created out of thin air. There's this debt tsunami in 15 years. That's an unspeakable number. It's hard to believe that we've gotten away with it for this long, but it's catching up with us quickly. U.S. interest expense versus GDP of various countries. The U.S. interest in 2018 of 500 billion plus will surpass the annual GDP of 167 countries. Next year, slated 550 billion in interest, okay? That's unsustainable. With a 1% potential interest rate increase, you're going to 750 billion by 2020. Well, that's taking a third of your budget, right? That's insane. That can't be sustained. Think in terms of what is in the best interest of governments and central banks dealing with enormous debts. Okay, this is what they have to deal with. The Fed's caught. They have to raise interest rates to stop inflation, but in doing so, they hurt the governments that they're serving, right? What's in the best interest of these types of people? Inflation is what is in their best interest. But the PTSB, as I call them, the powers that shouldn't be, now have a severely distorted competing agendas, and they're caught. They're really caught. They don't know what to do. I would love to be a fly on the wall in some of those meetings. This brings me back to virtually every government in the world is trying to promote inflation because there is so much sovereign debt. So they have three choices as this comes to its conclusion. Inflate the currency more, hyperinflation, which is likely. Default is out of the question, and restructure. Yeah, I believe there is a restructuring coming, but after a big mess. And that restructuring, people are going to find out that the money they have in their bank accounts is going to get switched into a new currency, and you're going to take a huge haircut because the PTSB isn't paying for their mistakes. We are. So consumers see the inflation. What does this mean? You see inflation enters the economy in stages where stage 1 and stage 2 have already passed. All right? You see it. You go to Costco. Kids were buying some cereal. The cereal box is the same price, but the box is getting smaller and smaller. Right? They try to hide it. They try to camouflage it, or you see it outright. I said last time I was here, my son and I went to Five Guys burger place, and what normally costs $22, the gal says $34. I said, there's a mistake. She says, no, we had two big price increases in the last couple months. I said, really? Well, I'm not paying $35 for 2 burgers and a Coke and a fry, right? Anyway, so what we're about to see is a change. The production manufacturing sector of the economy, the producers are suddenly paying more for the raw goods and commodities. Well, if they are, how come our commodity prices, the basic building blocks of society, aren't going up, right? But yet everything else is showing it's going up. This little chart is it just shows the segments where it's going up. And 1 or 2 months of higher producer prices for commodities or raw goods is no big deal. But once you're talking about 6 to 8 months of steadily rising producer prices, it becomes a significant event, and this is what we're seeing at this point. So this is problematic. I got a quick run up here. So Wall Street Journal, U.S. companies are raising prices on everything from plane tickets, paint, passing on to customer higher costs for fuel, metal, and food after years of low inflation. This is when things start to really get ugly for the economy, and the bond market knows it. Why? Because the 10-year Treasury bond has broken out of a 20-year downtrend. It's screaming. For anybody who understands these things, usually when stock market goes down, the bonds go up and vice versa. Well, now you're seeing stocks go down, bonds go down. It's the trifecta gold is starting to get its courage again. This is an amazing situation that's developed. Most people aren't following it, but I'll squint through this because I got to finish up some things here. But the Fed's caught. They're pressured to raise rates because of what we said. Reiterated that it will hike rates 3 times in 2019 rather than reducing. Made it clear that it will hike until it sees a negative impact in the real economy, the labor market, or consumer spending. So from my standpoint, the intervention phase, them playing God in these markets, is over. They're going to let markets start to unleash, the free market will. And I think that's going to unleash precious metal prices. Gulliver's going to break his bands. Gold's going to go. And the stock market's going to feel the real effect of what it's like to operate without that support. This is a massive deal. This is effectively the bond market's telling the U.S. that if you want to issue debt, it's going to cost more. And this is happening precisely when the U.S. is planning an astonishing $1.3 trillion in deficit the next year. In my view, 2019 will be when the U.S. debt crisis finally hits. And 4 stages for profiting. This is my last slide. Buy the best discoveries on the cheap during tax loss. Buy the exploration companies with the best odds and the best jurisdictions that I talked about earlier. Buy the quality development and production plays with good share structure, which sell off during tax season. You're getting a good chance to buy those on the cheap. And buy the companies that are trading at or near cash. They're out there. Look for them. I'm talking about them in my newsletter. So my newsletter services, Mining Speculator, subscribe, www.discoverynexus.com. So that's me. Thank you for listening. Up next is...